for another episode. Thank you for joining in for Faith in Home Buying, equipping people of faith for the home buying process. Yes, this is Tamika Ellsworth, and I just want to start at the top of the show by saying thank you. Thank you so much for your support. I've met some amazing people over the past, several months, and some that I've even been able to help with home ownership, and some that are still in the process, and others even that have needed to sell their properties and their homes have reached out, and it's just been amazing. So, I just want to start off first by saying thank you. I really do appreciate everyone who tunes in, and and believe it or not, it every time I hear someone saying that they've heard the show or listened to the show, it really does help encourage me to continue on. And just it takes a lot to do a show like every week. And as you're doing it, you think like, okay, gosh, I hope I'm helping somebody. I hope the information is reaching someone. So little small nods to that, it really does help. So again, thank you so much. um, I do want to get into, because it's a lot to kind of cover with this topic, with regards to FHA financing. And those of you that don't know what FHA is a Federal Housing Administration loan. And just to give you a little bit of context, I'm now working, and I have been really working with a lot of FHA buyers. And FHA buyers, it's a whole class into itself, and I'm going to get into what an FHA loan is. But I really I felt the need to talk more about FHA, because I think a lot of people, even though you can qualify for it, you don't know a whole lot about it. And there's a lot of agents that don't know a whole lot about it too. I fortunately have been graced with being able to work a lot with first-time home buyers, and even other buyers as well, who have qualified for an FHA loan because of situations that have maybe happened in their lives, or they're just first-time home buyers and they don't have a lot of down payment to put down. But I think it's necessary to speak on. And hey, wisdom is everything, right? All we have to do is call upon her, and she continues to direct our direct our knowledge and our information. And who doesn't want knowledge and information, right? So dive in here with me. So Federal Housing Administration loan, that's an FHA loan. Um, it's a mortgage that's insured by the Federal Housing Administration, FHA, so you've heard that term before, and issued by an FHA approved lender. Okay, so not everyone does FHA loans. However, not everyone's an FHA approved lender as well. FHA loans are designed they're designed for low to moderate income borrowers, because they require a lower minimum down payment, and also lower credit scores than many conventional loans. Doesn't mean you have to fit inside that box. I've seen other people being able to capitalize on an FHA loan. However, the payments are a little bit higher when you use an FHA loan versus a conventional loan. So that's why most people that do have the money to do 20% or just to go conventional, they usually go that route. The good thing about the FHA loan is that you can borrow up to 96.5%. Well, that was in 2020, but the 96.5% of the value of a home with an FHA loan. And so this means a down payment of approximately 3.5%. You do need a credit score of at least 580 to qualify. And if your credit score falls between 500 and 579, I've heard that you can also get an FHA loan just as long as you can make a 10% down payment. So it's going to be increased. So 10%, or maybe more, or somewhere around that, you're going to have to put down, but it's still possible. Okay. And then, with the FHA loans, the good thing about it too, just kind of like a conventional, your down payment can come from your savings. It can come from a financial gift from a family member, and or a grant for down payment assistance. So, those are big pluses, because they have a lot of benefits for first-time home buyers. Granted, in this market, it's a little bit harder, because I gotta, again, you've probably heard me say this before, the totem pole of loan programs are, first, cash is king. It just is. Quick close, no appraisal, get the money and pretty much run and take the home for as is, right? So you have your cash, you have your 20% conventional, then you have your all your other, 20%, 18, 15, 10, even 3%. And then you have your FHA, which is your 3.5%, and then your VA, which is 0% down. And then you have, your USDA also two loans, which is 0% down too. So the pecking order of, especially in a very competitive market, you got to make sure you understand it, and the agent that is representing you understands it too. It's a little harder. So let's not get it twisted. I have met a lot of resistance when it comes to this particular loan. And, when we're able to push through, it's a beautiful thing. Ultimately, the way that the offer will be constructed that I do, I make sure that, hey, everything is checked off on the list, so that number one, presentation is everything, and that we have everything that we need in order to be a strong offer. And, especially if we have to come in non-contingent, that we know that what things we can and can't do. And I'll get into that probably more in the second segment, talking about the different things you need to look out for an FHA loan to make sure that you're successful when trying to go in strong on an offer. Okay. And I guess it's important to know too that, for an FHA loan, the FHA doesn't actually lend you money for the mortgage. Instead, you get a loan from an FHA approved lender, okay, like a bank or another financial institution. However, the FHA guarantees the loan. So some people refer to it as an FHA insured loan for that reason. And so they make sure that, as they qualify, there are things that you're going to have to pay, such as mortgage insurance. And there's premium payments that are made to the FHA, and that mortgage insurance is insurance that covers, just in case you default, the bank, they will get paid their money. So it's actually probably a good thing, really. But I've known that it increases your credit, your mortgage payment anywhere between $500 and $700 sometimes, just the way that it goes. A little history on that. It was actually created in 1934 during the Great Depression. And at the time, the housing industry, there was a lot of defaults and foreclosure rates. They had skyrocketed. Loans were, limited to 50% of a property's value. And it was just hard. And so as a result, the U.S., they were had a whole lot of renters, and only approximately 40% of the household, they owned their homes. And so in order to stimulate the housing market, the government created the FHA, which is the federally insured loan programs that reduce risk to the lender and made it easier for borrowers to qualify for home loans. And so the home ownership rate in the US, it did climb up, reaching an all-time high of about 69.2%. In 2004, which is amazing, right? According to research from the Federal Reserve Bank of St. Louis, that's their numbers. In 2004, it was 69.2%, and as of the second quarter of 2020, it actually rose up to 67.9%. Not too shabby. And just to let you know too, and most people don't even know this, that there's different types of FHA loans. Okay, so in addition to that, the like regular FHA, they actually have a reverse mortgage program. And these are for seniors age 62 and older, and it converts the equity in their homes to cash while they continue to retain the title of the home. So you choose how to withdraw the funds, and it's either fixed or monthly, line of credit. So that falls under the FHA type of loan. Okay, it's called a home equity conversion mortgage, or a HECM. Okay, there's also another one, FHA 203K, home improvement loan. I love these, but they do take a little bit of a longer time, but the loan factors in the cost of certain repairs and renovations of the loan. This is one loan that allows you to borrow money from both home purchase and home improvements, which can make a big difference. So if you don't have a lot of cash on hands, but you need that home fixed up, FHA 203K improvement loan is something that you might want to look into. They also have FHA energy efficient mortgage. Believe it or not, it's a similar concept to the 203K improvement loan, but it's aimed at upgrades that can lower your utility bills, such as insulation, solar, wind systems, and just basically giving you the idea for energy efficient homes. They usually have lower operating costs, and they lower bills, and they make more income available for your mortgage payments. So that's also something to probably look into. And then the last type is there's a section 245A loan. So this is a program for borrowers who expect their incomes to increase. So under that program, the graduated payment mortgage starts with lower initial monthly payments and it gradually increases over time. I mean, that's a whole nother ball game. Hopefully you can talk to your lender or mortgage consultant about those things. And if you need more information, you can always contact me at Tamika Ellsworth. .com, or you can catch me on Instagram at Tamika Ellsworth, or hey, I'm also on TikTok, and I might even do a live on this on TikTok at real estate_T. But let's talk more into it. And like I said, I'm going to go into like the different factors of an FHA, but the good thing about it is if you have low credit score, it's something that can actually work with you. And that's a great thing, they even give just a lot more grace when it comes to if you have like student loans. Maybe if you had a bankruptcy event. For an FHA loan, any type of mortgage, at least 2 years must have passed since you've experienced a bankruptcy, unless you can demonstrate that the bankruptcy was due to an uncontrollable circumstance. You got to be at least 3 years removed from any mortgage foreclosure event, and you must demonstrate that you're working towards reestablishing your good credit. So it's actually pretty good. And but one of the things I do know is that if you're delinquent on your student loans, like the federal student loans or income taxes, you won't qualify, because obviously federal is kind of connected, right? So there's a lot of forgiveness, and it's definitely something you should look into should you be have a great income and maybe some dings on your credit, but you should probably look into it. And I say that too, just to kind of get your foot inside the door, not too shabby, right? So what I'm going to talk about next is some of the things to look out for an FHA loan, why it's different than a conventional, why sometimes sellers are like, oh no, I don't want to deal with someone that with an FHA loan. Why? Yeah, it's because there's some things that dealing with health and safety that you got to make sure that you're on point with regards to the FHA loan, because it can get you in a world of trouble if you don't know what you're looking out for, right? All right, so stand by. In the next segment, we're going to talk about that, dive into it. This is Tamika Ellsworth, Faith in Home Buying, and I'm equipping you people of faith for the home buying process. All right, welcome back, everyone, for another episode of Faith in Home Buying. This is Tamika Ellsworth, and I'm having fun today. We're talking about FHA loans. I have a lot of first-time home buyers that are utilizing this loan, and I'm a fan of it. I really am, but I think that there's a lot more education that needs to happen on understanding the FHA loan, not only as a first-time home buyer, but as even an agent, right? So here are some other little tips, and then I'm going to go into what you need to look for the home. So qualifying for the FHA loan, okay? I'm giving basic kind of general, every person is different on how they qualify and fit. So if you think you do qualify from what I'm saying, do speak to a mortgage consultant. If you need some help in that, contact me. I can connect you to some great mortgage consultants. But the first one, they'll evaluate your qualifications, okay? So they won't, not all the time do they just use your credit report. They may look at your work history, okay? It's not just your credit report, that's one part, but they also look at your work history for the past 2 years, okay? Payment history records, utility, rent payments, all of that stuff. And, reestablishing good credit if you had like a little bit of a problem with it. You've gone through bankruptcy, foreclosure, you can still get a loan going through FHA as well. It's important to keep in mind that the lower your credit score and down payment, the higher the interest rate you'll pay on your mortgage. So just like a car, like if you go in, hey, they have bad credit, usually your interest rates are going to be really, really jacked up. Why? Because of the risk factor. Okay, but along with the credit score and down payment, there's mortgage requirements that must be like, for instance, steady employment history. Or, you have to work for the same employer for the past 2 years, or like in the same industry. That's important. Okay, if you're self-employed, you need at least 2 years of successful self-employment history. Okay, so you got to show something that can be documented by tax returns or like a current year-to-date balance sheet, profit and loss statement. But if you've been self-employed for less than 2 years, but more than 1 year, you can still be eligible if you have a solid work and income history for the 2 years preceding self-employment. All right. And so again, case by case scenario. They have to dive into everything that you have when you fill out the application, put in your numbers, they'll be able to let you know. But again, it's a lot more forgiving than it would be on a traditional, conventional loan. The property, usually, I mean, I've never seen anything different, but should be financed, that's being financed must be your principal residence and must be owner occupied. So remember, the FHA loan program, it is not intended to be used for investment or rental properties. Detached to semi-detached houses, townhouses, row houses, condos, but they have to be, those condos have to be FHA approved condo projects. These are all eligible for FHA financing, okay? So I just want to kind of get that out there too. But let's also talk about what to look out for. There's standards, like the home has to be in a particular condition, and that's what makes it a little bit more difficult. So I'm going to go through some items that you got to look for, like some items that the FHA, when they go out, you're in contract, they'll come out and they'll actually appraise the home and look for things that need to fall under the FHA requirements, right? So here are a couple of things that you might get tagged for should they come out and they're not done on the home. Again, keep in mind, missing handrails, that's huge. Again, health and safety stuff. Don't have handrails, you might fall. Health and safety. Cracked or damaged exit doors that are otherwise operable. So, going in and out of the home, you got to have doors that open and shut, right? Cracked window glass is important. Why? Obviously cracked glass can lead to exposed glass cracking and, health and safety, right? Defective paint surfaces on homes constructed really pre-1978. The reason why, there is lead that was found inside paint then. So paint chips, things of that nature around the house. If you go in and all those things are peeling around the house, guess what? You got to have that repaired before closing. So someone's going to come out of pocket, whether that be you or whether that be the seller being nice enough to lower their to come out of pocket for these repairs, or finding a way to do it yourself. But that's just a whole lot of work before closing, not even knowing that this house is going to be yours. Plumbing leaks, like leaky faucets, those are things that need to be repaired. Those are little small ones, but those are still things that need to be repaired. Defective floor finishing or covering, believe me, things that are worn down to the finish or badly soiled carpeting, it will be an issue, okay? Evidence of previous wood destroying pests and organisms. So things like, like extensive termite damage, or dry rot, or just molding fungus, very obvious, blatant stuff, not good. It is something that's going to have to be repaired. Again, health and safety, right? Rotten or worn out countertops can't just have a fixer-upper that has like nothing in it. Like it has to have a heat source, so that has to have an HVAC system that's actually working. I've seen people get away with having like a fireplace as well. So it looks like that can kind of, work, but, again, it's case by case scenario, making sure your mortgage consultant knows what's going on so that the underwriter is okay with what is going on with the home. Poor workmanship, man, if it's something that's about to, you blow on it, it's going to fall, not going to work for an FHA loan, because they're insuring this, right? Trip hazards, crawl space with debris and trash, and then lack of just even driveways that are not accessible. Those are things and issues and problems that will come up on an FHA report when they're looking at your home. All right, and here's some more. These are some more like common problems that are a little bit easier, but some not as much, right? Dealing with your electrical and your heating, right? The electrical box, it shouldn't have wires kind of going out, and I think that's one's the obvious one, like because health and safety wise, someone can get electrocuted. The habitable rooms, they have to have a functioning heat source. They just have to, health and safety. Don't want anybody to freeze. Roofs and attics, the roofing must be keeping moisture out. So no active leaking coming down, or no like obvious like water bubbles coming from the ceiling. Anything that has like maybe even a stain from the ceiling, that might be an issue as well. Even like the roof, like if the roof has like more than three roof lays on it, they may have to replace the whole roof. No joke. I've seen it happen, read about it too. Water heaters. they must meet local building codes and they must convey with the property. So they have to go along with it, but they got to be strapped correctly. Believe it or not, that's a thing. Hazards and nuances, I've never really seen this kind of happen, but still, like contaminated soil, that's obviously going to be an issue. Proximity to a waste site is going to be an issue. Heavy traffic, I haven't really seen that one, only because, I know a lot of homes have been close to the freeway. So I think that's probably a case by case scenario, all depending on where you live at, and just that proximity, like if it's really, really loud or in a plain flight pattern or something like that, that's excessive, then there might be an issue, believe it or not. Property access, like you got to have access to the place. It can't just be you have to crawl through the roof in order to get to the house. Not going to work. So that's why a lot of REO foreclosed bank-owned properties, you can't really use an FHA loan on those homes because it just won't work, because it has to have you have to safely be able to open the door and go inside of it. Structural soundness, that's another thing too. Defective structural conditions or conditions that can lead to future structural damage, it must be remedied before the property can be sold. And that's including like defective construction, so excessive dampness, leaking, decay, termite damage, and settlement in the home, like it's it's tilted. It's going to be an issue. Asbestos, especially if it's damaged or deteriorating, because that's when that stuff it gets frighteningly in the air. It can actually affect your lungs. So health and safety, right? The home must have a toilet, sink, and a shower. I know it sounds silly. I know it does, but you do have to have those things. People take a lot of things when homes are like foreclosed on or short sold and stuff. So just know that those things have to be a part of the home. Appliances, okay? They have to have working appliances, like particularly a working stove, okay? You don't necessarily have that other stuff, but I know that usually the appliances with the stove, that's an important one. Dishwashers and kind of the other stuff, I've never really seen that be an issue, but definitely stoves, you got to have that, So like, what do you do, in these events to make your offer strong? And in conclusion, what do you do to make your offer strong to make sure that you can compete? And some of the things I would say that, sometimes you might have to go a little bit higher in your purchase price so that the seller will feel comfortable if certain things need to be done. Looking at the disclosures and reports up front to make sure that you are very prepared on what needs to happen, especially when you go and walk the property, you look to see the certain things that need to be done. And if it's too much on that list of things, or you're not willing to take the money in order to do it, move on to the next one. That home isn't for you, and that's okay too. There are homes that fit inside those boxes. There are, agents that can advocate for you, especially when there's few in between homes, and they can advocate for you and say, look, Mr. Seller or Mr. Mr. or Mrs. Listing Agent, my client is a FHA buyer. Doesn't mean that there's anything bad, but there's only few homes that come up. And this is why we're going for your property, So there's reasons and ways in which you can help talk with a listing agent, and so they'll feel a little bit more comfortable with your FHA offer. And so, in conclusion, there's resistance, yeah. But I think once you're educated on it a little bit more, and again, I can be reached at TamikaEllsworth.com or 408-561-7922. You can hit me up on Instagram or on TikTok, real estate_T. But I think I'm going to be talking about this a little bit more on my live, because I'm finding there's a lot of those that are, it's great coming into the market, having faith to do it, but not really understanding the type of loan programs that are out there that you fit into in order to make homeownership a reality. So thank you again. And again, if you have any other questions, comments, concerns, please hit me up. Please reach out to me. I look to connect you to mortgage consultants and agents that can actually work with you. And they specialize in FHA loans, and we've worked together on many different loan people and situations and have gotten them in. But thank you so much, Tamika Ellsworth. Faith in home buying, equipping people of faith for the home buying process.